Great morning, warriors. How's everybody doing this morning? It is cold in Boston. Yes, it is. However, I am sure that you are warm in your house. Well, this morning, there are two words that can strike fear in the heart of men and women. And one of those words is taxes. The other is the IRS. Two words that draw people to a standstill. It stops them in their tracks. And yet, taxes can be your best friend. Wait a minute, Brent. Come on. Taxes can be my best friend. Yes, they can. They are the friends of the rich. Why? Because you and I are paying as much as 39% federal taxes, and that doesn't include our states. That's just the federal taxes. And yet you have others out there that are wealthy, that are paying as little as 14% income tax. So why the disparity? Why the difference? I'm going to share something with you. Take a look at this book. 475 deductions for who? For business and who? Entrepreneurs. It is for the business and the self-employed individuals. This book, 475 deductions. Is that amazing or what? That's why you've heard me over and over and over again speak about the fact that we need to own businesses. One of the first things that wealthy people do is they own a business. Why? Because when they own a business, they are able to make deductions. In fact, in this book on page 2, and by the way, there are updates of this book. I happen to have the one that says 475. And so it says here how to best use the book. And it talks about the fact that it's a guide. Now, it's meant to provide complete information on all federal, mind you, this is federal, on all federal laws that are typically we wouldn't see or we wouldn't think about, but that's what it's designed to do. It says there are already enough publications available to do just that. So this particular one is a guide that has lists, and it focuses on consulting, writing, teaching, and running my own business. It goes on to say, I let you know what the deductions are and whether they apply to you in your business. What I appreciate is in the back of this book, he gives you, and by the way, this book is written by Bernard Kamoroff. He is a CPA, certified public accountant. What I appreciate most is he tells you what the deductions are about. He gives you definition. For example, let's take a look at something when we think about tips and we think about tolls. Here's something interesting. He says, tip number 1, don't invest in anything that eats. He says, don't tell the IRS auditor that income taxes are unconstitutional. These are tips that we should know. He says, tip number 3, tips paid for meals or entertainment are only 50% deductible. So what the point that we're driving at is this: we need to know, I won't say as much, we're not CPAs and that's not what our job is, but we need to be familiar with what our tax preparer, our tax accountant is doing. We need to have a clue. So it goes on. Here's another one. When we talk about tolls, it says here, vehicle tolls are in fact deductible. However, here's the deal. If you take the standard mileage allowance, tolls are deductible in addition to the mileage allowance. And right now, the mileage allowance is 57 cents a mile. There are so many apps out there that we can utilize for our mileage that we don't have to go to pen and paper anymore. Right in our phone. And virtually you can create a way for almost all of your mileage to be tax deductible. Let me grab another one that I liked. Here's one that often comes up, especially it says theft losses. Suppose, in fact, your office was broken into. Well, here it goes on to state that stolen depreciable property, that's business assets that you are depreciating, can be deducted as a theft, but only to the extent of the unappreciated balance. So in other words, you cannot deduct the whole thing, but you are able to make those deductions. How about this? Tax preparation returns. Fees paid to prepare business tax returns are deductible. So what he has done is he has given you a plethora of information, and he's given you explanations on why those items can in fact be deductible. So somebody in the feed, please write in 475 tax deductions. And again, it's by Bernard Kamoroff. So let me go back. I wanted to go back to the beginning of the book. And now this is the former commissioner, Mark Everson, who said this: if you don't claim it, you don't got it. If you don't claim it, you don't get it. That's money down the drain for millions of Americans. And you know why that often is the case? Is because most of us are afraid. Again, we shudder when you say IRS. We immediately shudder and we start thinking they'll attach my bank account, they'll attach my property. And then you've heard the numerous stories about people that have not gotten their lives back once the IRS has stepped in. And I am saying to you that the IRS can, in fact, be your best friend if you know how to utilize it. So let me come back on page 2 of the book. And it says here how to use this book to your best advantage. And the first thing it says is to be forearmed. In other words, we are on a trajectory for creating legacies. We're on a trajectory for creating lifestyles. And so because we are on that trajectory, we have to be forewarned. We have to have a clue. We cannot leave things in the hands of other people. I did something recently, left it in the hands of someone and thought that that person understood, and they didn't. And I have no one to blame but myself. If we're leaving it in the hands of somebody else, then we need to write everything out that pertains to that. Everything out that pertains to that. Now, with that being said, let me take just a moment to woosah, bring it down a few seconds, and give some notoriety and some congratulations and the Early Riser Awards. Who do they go to this morning? They go to Ms. Alita Lopez Thomas, and they also go to Deborah Vaz, better known as Debbie Vaz. So I want to give a shout out, give an award out to these two ladies that were the early risers. I want to thank you so much for being on the broadcast by way of viewing the broadcast. Want to give a shout out or shouts out to Trinidad, because we have the early risers from Trinidad. That is Jackie Burgess and Indra Goffrey. So I want Joffrey, I apologize, Indra. So I want to make sure I give the shout outs to them as well. The early risers, we are an international broadcast, ladies and gentlemen, and that, in fact, is awesome. So I had to make sure that I did that. Now, before we go on, we need to share and let folks know what we're listening to, because right now, this month, is the month where taxes are going to be talked about more than ever. We have 2 more sessions just talking about our taxes. That was one of the reasons why I said to folks, listen, I know that you may want to get that tax return done and you may want to get that cash back now. This is going to get you more cash back. So let's say you do not have a business. Do you own property? Because if you own property, guess what? You are in business. So with that being said, we are going to we're going to get people, we want people on this broadcast this morning. We want them listening intently to the information that's given, because guess what? This information is complimentary. It's courtesy. It has a significant value. Decide that you want to go in and sit down and talk to a tax attorney about your taxes. You can expect a bill. And at $400 an hour, even if it was $200 an hour, it's $100 an hour. That is still money out of your pocket. So right now, this is courtesy. This is complimentary. And you want to invite others. We want to have a flash mob of people hearing what we've got going on. So I'm going to ask all of you to go up to Twitter. That's right, go up to Twitter. And if you like, go up to Facebook too, if you can hit the button twice. And what we want to do is say, join the Wealth Warrior broadcast now. Join the Wealth Warrior broadcast now. In fact, it ought to be right now. So I've given you enough time. We know what the drill is. We know what the flash mob is. Type that in. And on the count of three, from 1 to 3, 3 being the time when we, the enter button, and we're going to flash mob people. Are you ready? 1, 2, 3, hit the enter button. Flash mob! Yes, indeedy, ladies and gentlemen, we want to bring people in. See, we still have a mission. We still have a project at hand, and that is to help 100,000 people around the world create legacies, and legacies that have value. And one of the very first values is our taxes. Because when we reduce the taxes, that is more money in our pockets. Much more money in our pockets. I want to read something to you where he says how to best take advantage of the book. He says that, first of all, step 1 is for each deduction, I define the terminology, and he does. He defines that terminology for us. And he says, not as an IRS particular section or code. What he is doing is he's giving you the jargon, he's giving you the language, so that when you are sitting down with somebody, you know what they're saying. You don't necessarily need to vocalize it, because you want to listen. You want to hear every nugget that they're talking about. What's the second way that this is used? Is if there is an exception to the laws, or there are complications or special situations for some business, he says, I alert you to the details and explain in detail so that you understand what you're saying or what somebody is saying to you. Next, step 3, if it's necessary, I do in fact refer you to free IRS publications. So that is what he is doing for us in this book, is helping us get clear. Now, I want to come back for a moment. Typically, on the businesses, we're filing a Schedule C. That's typically for your businesses. It's a Schedule C. If you are an entrepreneur, typically you're going to be filing a Schedule C. If you are a small business owner, you will probably be filing a couple of schedules contingent upon the way your business was structured. If your business is an LLC, totally different ball game. If your business is a S corp or a C corp, totally different conversation. However, again, this book does apply because it's for businesses and for self-employed individuals. So I want to take a moment. So a lot of times what happens is people say, oh, Brent, I wish I had that book last year. Well, see, there is something called an amendment. You can amend your taxes. Let me say that again. You can amend your taxes. You can go back 3 years worth of tax returns and you can amend them. And what you want to do is you want to figure out, is it worth it? If it's going to cost you X amount of dollars to amend the taxes and you are not going to get that back, then you have to rethink it. If it's going to cost you $500 to get $200, yeah, you may say, hey, I'm going to let that go. But I will tell you, personally, I have literally had double-digit returns on amended taxes. Double digit. So if in fact you need to speak with somebody about that, inbox me and let me know that you need to speak with somebody, and let me refer you over to a couple of individuals that specialize in that, so that you can take advantage of the possibility of bringing in some extra cash. You might have missed a deduction because we do not know them all. And quite frankly, a lot of us are not using tax professionals. It is imperative. That's part of your power team. Your power team is your attorney. Your power team is your tax preparer. Your power team is your coach. Those are some of the first individuals. Your power team is your personal attorney, different from your tax attorney. There are likely 7 people that need to be on your power team. But I'll tell you, as Danya Zimmerman would say, at a minimum, you need to have an attorney. You need to have a tax preparer. You need to have your own personal attorney, different from the tax attorney. And I added one more at the E3 Power Up event. I said, you need to have a coach. A coach helps you to dodge or avoid a lot of the pitfalls. They help you to stay on the right path. They have the playbook. And your job is to write your playbook based on what you learn from your business coach. So I want to give a shout out to the business coaches. Hey, I'm in the same ballpark with you. And you want to get somebody that is effective, that can really help you navigate the landmines. Now, one of the things that I really appreciate is in his book, early on, page 9, he talks about keeping records. I'll tell you, that is probably the largest challenge that most entrepreneurs have, most small business owners have, is keeping records. Because there are times when it's so monotonous and you just get tired. Oh my goodness. And if we could develop a habit of daily, whatever we have in receipts, of going ahead and filing them, then I'll tell you, I promise you, at the end of the year, it would be a walk in the park. You'd be taking a box, bringing it to your tax preparer, all your files in there, and saying, here it is. But most of us, that becomes one of the last things that we want to do. Yet let me share with you what he says here. Most legitimate tax deductions are lost because people don't know about them. That's the reason, of course, for this book. Many more tax deductions are lost simply because people fail to record them. It's a habit. It becomes a habit. How long does it take to create a habit? It takes 7 days to create a habit, 30 days to install a habit, 6 months to make that habit a lifestyle. So let's use making our bed. 7 days in a row, we make the bed. On the 8th day, we leave the room and we do not make the bed. And we keep getting this twitch. And that's the twitch that's saying to you that there's something you didn't do. And it's saying to you that you need to take care of it. Now, if we ignore the twitch, by about the 10th day, twitch is gone. So it's going to really be loud. Day 1. Day 2, it's going to be. Day 3, it's going to. And day 4, it's not going to exist. And yet record keeping is critical. It is a significant part of our ability to reduce our taxes. And that really, what you're wanting to do is you really do want to reduce your taxes. You do not want a 39% liability, do you? I know I don't want 39%, especially when I know that there are political individuals, when there are others that are paying such a significantly small amount in comparison to us. Here we're paying 39%, they're paying 14%. What's wrong with that picture? And some would say, hey, Brent, no, it's 28%. No, while we were sleeping, it moved up to 39%. So record keeping is the number one thing that we have to do. Let me share a little bit more about what he says on that. He says, if you don't have a good set of business ledgers, stop. He says, if you do not have a good system for recording every business expense, stop. He says, get a set of ledgers or get an accounting software program and learn how to use it. Hire an accountant or bookkeeper if necessary to help you set up the ledgers for each of your basics. Now, let me share this one with you. When we put such critical things into the hands of other people and we do not pay attention to it, we have no one to blame but ourselves when something goes catastrophically wrong. What did he say? He said, stop. You've got to do this. We've got to do this. I tell you personally, I have a box and each box has the year on it. I have folders in there and you've got the titles on it. Drop the receipts in there. You then have the ability to engage somebody that enters that information into the software. Truly, you have got to be paying attention. You've got to do your balances, your checks and your balances. If you do not do that, and I'm not trying to scare us, I'm trying to inspire us to take the action necessary, because this is first step in wealth. See, this year we're going to go step by step by step by step each month. And I have Pamela Stone to thank for that. Pamela said, Brent, can we do this every month, focus in on one element? Because we're in year 3. Year 3 is a powerful and pivotal year. And quite frankly, as far as I'm concerned, hashtag, this is our year of destiny. Dictate your destiny. Hashtag, dictate your destiny. Dictate your destiny. And the only way that we do that is we have checks and balances. We have the wealthy that have accountants that watch the accountants. Do you know that there is a company that literally hires 600 accountants? 600 accountants. Why is that? Because they know those accountants are looking for every possible deduction that could. Can you imagine we pay more taxes than GE Power Company? We, you, me, pay more taxes. Why? Because we are not paying attention to the most powerful things that we need to pay attention to. And that is our taxes. Our taxes will, in fact, create our wealth. We reduce the taxes, we've got more cash to put into investments. We should ponder on that for a moment. Ponder on that. He goes on to say, get receipts for what? Everything. I don't care, because you might have a creative tax preparer that can figure out how that receipt can be utilized. Get receipts for everything you possibly can. Set up a good filing system for the receipts and keep the receipts at least 3 years. At least 3 years. That's what you want to be able to do. Now, it goes on to say that 3 years from the date you file your taxes is the IRS able to still, rephrase that, let me say it this way. 3 years from the date that you file those taxes, the IRS can still challenge those. So you want to have your proof in hand. Now, here's something very interesting. You know, the receipts that you get that have that, it's a type of a paper that really it virtually goes away, that the sunlight hits it and it goes away. I'm going to encourage you to make copies of the receipts, because those receipts, the paper, heat, those kind of things will get in the way, will actually cause those papers to essentially dissipate. So personally, make a copy of it, and I still staple the copy, or I tape the copy to the receipt. So if you've got a sheet of paper here, you've got a receipt, tape it, staple it. Therefore, you have that information, because the IRS will come looking and you want to feel comfortable about what's just happened. Because too many times we become literally frightened. And when you become frightened, that's when you can have problems. Now, there is something called a cash method versus an accrual method of accounting. I'm going to submit to you that you want to talk to your accountant, your tax preparer, about which method is best for you. The cash method, it's cash right on hand. Your accrual method is expected cash. Well, what if the expected cash doesn't show up? Now, if you are a hairstylist, if you are in an environment, if you are a cab driver, taxi driver, limousine driver, if you are in an environment in which cash is typically the exchange, then I'm going to submit to you, you really do want to talk to that tax preparer about what best works for you. Now, you remember at the end of December, I kept saying something about your year-end things that you needed to do year-end. Listen to this. This is about your year-end payments. Checks written and mailed or delivered by December 31st can be deducted the year written, even if they are cashed in the new year. Now, I know there are going to be some smart people that said, well, I'm going to write a check out that says December 31st. And somebody's going to cash it in January, and I'm going to be good to go. No, that's not the case. Because the post stamp is going to dictate some of that story too. So if you got it into the post office, it got stamped on December 31st, you're still good to go. You can still make the deduction in the year. And in this case, it will be 2016. Transitioning. Structuring transitions to the year best for your tax advantage. What does that mean? What that means is this. You might have taxes that you can choose to pay this year, or you can carry that forward. You might have deductions rather that you can pay in the year that you can take in the year 2016. You may elect to utilize those taxes, the tax deductions, in future years. We don't necessarily need to take them all in this year. Now, where does this play a pivotal role? When you are purchasing real estate, and in particular, when you're purchasing personal real estate, when you're purchasing that residential piece of property, those deductions you may want to carry forward into another year. And why do I say that? Because especially if you're doing a full documentation loan. So what is a full documentation loan? A full documentation loan is a loan in which you're using your taxes, your tax returns, to qualify you for the mortgage. And typically you're going to have 2 years worth of tax returns. So let's say in this case, it's 2016 and 2015. Well, if you took those taxes and you took all the deductions and it reduced your gross income, AGI, your adjusted gross income, phenomenally low, that may not benefit you when you are looking to qualify as a full doc loan. And I'll tell you what, one of our warriors, Kelly McGovern, can actually speak to that for you. And I know that there are some others that could speak to that for you as well. But that's why planning and purpose is so critical. Planning and purpose is critical, because That's how we reduce our costs. Some of us are paying far, far, far too much in taxes because we are not planning and preparing in advance. We're on the spur of the moment. There are some things that spur of the moment is actually great for, but I've got to tell you something. It is not great when we're looking to make major acquisitions. Chapter 3 talks about the 4 basic rules of all expenses. It goes on to say that the expenses must be incurred in connection with your trade, your business, or your profession. Your expenses must be relative to the business that you're in. Now, some of the challenge businesses will be consulting businesses. Consulting businesses, coaching businesses, there are times when that deduction will be challenged. That expense rather will be challenged. You're going to need to speak with your tax preparer about this. But again, the 4 basic rules say that it must be incurred in connection with your trade, business, or your profession. So let's say, for the sake of argument, we're talking about eating. We're talking about going out to eat. You've got to be able to identify who you went out to eat with and what was the dialogue, what caused this deduction, or this expense rather, to be a legitimate expense for which you could actually deduct. It's an excellent question. It really, really is. Another one. The expense must be ordinary. What am I thinking about? The first thing that hit me was a wash machine. I don't know why, but a wash machine hit me. A wash machine is not an ordinary expense unless you happen to be in the business of appliances. Then you might be able to consider that worthy of an expense. But an expense has to be ordinary. It has to be relative to. And in fact, now here I go back, and I'm going to go back to the rear of the book, because he gives us, I tell you truly, I want to go back to the first page. And I tell you without a doubt, I've never seen a book that will share and shed so much light. Now, the book itself is 211 pages. He starts talking about your deductions, the possible deductions, on page 29. Page 29 is where he starts talking to you about various types of deductions that you may be able to make. For example, accidental insurance, health insurance. It talks airfare, alarms, allowances for bad debts. Somebody didn't pay you. There is a category for that. Amortization. And he explains all of these to you. Ladies and gentlemen, so that means there is this much. Take a look. Let me put this up here so that you can see it clearly. You see that? This much is explanation. Here are your deductions. I would encourage you to treat this like you would a dictionary. Go through and read each one of these and highlight the ones that you know are applicable to you. For example, you bought a house, the appraisal fee, tax deduction on your Schedule E. And so that's why getting familiar with this. There are certain antiques, if you are in that business, that are an asset on one side, and yet they have depreciation on the other side. He talks about art treasures, fees. Whoa! Your attorney, certain attorney fees, certain bank charges, all of these things. But if we're not familiar, guess what happens? We cannot make that deduction. So that's why I'm sharing with you how critical it is. It is like first stop when it comes to leaving legacies, when it comes to your wealth. Let me share another one with you. The expense must be necessary. It was necessary for me to go out to dinner with Brent Harding because we needed to talk about X, Y, and Z. You've got to be able to give the evidence of why this is a necessary expense. If you're a salesperson, then guess what? That was a necessary expense. I took my client out to dinner, or I had to go out to dinner. We both paid our own way. We did it Dutch, but I had to go out to dinner to seal the deal. The expense must not be lavish or extravagant under the circumstances. In other words, I went out and I bought my client a year-end gift, and that was a $4,000 necklace or a $3,000 bracelet. No, not gonna cut it. So it goes on to talk about that. By the time you get to chapter 4, now he's talking about the 475 deductions. Now, some would say, well, Brent, I know a book that has that literally there are 1,400 deductions. I'm not disputing that. However, what I'm saying is these are the 475 most common. So let me share with you specifically. He says from accountants to zoning, these 475 listings are arranged. They're arranged in alphabetical order, and each deduction is defined and explained so that you can mount a defense if there was a reason to mount a defense. That's what we're talking about. If there was a reason. In other words, what you want to do is you want to make yourself, you want to be totally, you want to make yourself defensible. And you want to take that fear away and say, bring it on. And I'm going to share something else that's very powerful, and that is that you want to listen. See, a lot of times we want to explain, no, listen and see what the person has to say before we answer. The Judge Leonard Hand, who lived actually from 1872 to 1961, said this: anyone may so arrange his affairs that his taxes shall be as low as possible. He is not bound to choose that pattern which best pays the treasury. Everyone does it, rich and poor alike, and all do it, for nobody owes any public duty to pay more than the law demands. The law demands. Now, I will tell you this, in the upcoming weeks, the next couple of weeks, we're actually going to bring on the professionals. I've had the privilege of talking with you. However, I want to now validate my conversation by having someone here that can literally speak directly. I want to give you something else. This is in the beginning of the book. This is by the IRS, and it says, if the adjustments required by Section 481A and Regulation 481-1 are attributed to a change in method or accounting initiated by the tax preparer, the amount of such adjustments, to the extent such amount does not exceed the net amount which would have been required if the change had been made in the first taxable year. It goes on to say that shall be taken into account by the tax preparer in computing taxable income in a manner provided in those specific sections. So what the point of this is that you have the right, you have the absolute right to challenge. But I'm going to tell you something. Why challenge? Why put yourself in that position? It is so much more beneficial if we could do things correctly. If we could go ahead and do things correctly and directly, then we would not put ourselves in a challenged position. Do not, I subscribe to you, do not be afraid. Surround yourself with a power team. And the power team works for you because you are paying them. and become the check and balance for your life. This year, 2017, I submit to you, is a year, hashtag, it is about our destinies. Okay? Hashtag, dictate your destiny. 2017, as far as I'm concerned, is the year of economic justice. And I have Chantel Bethea to thank for that from the Women in Action out in Worcester, Mass. Dictate your destiny, and this is the year of economic justice if you choose for it to be. I took a few breaths today. That really is all I have to say regarding this matter. I want you to marinate on it because, believe it or not, there was a lot of information that was discussed here this morning, especially if you haven't been a person that is focused on your, has been as engaged. I will share this with you. If you are about the business of lifestyle and wealth, then it is going to be imperative for you to engage the services of a tax preparer that understands your history, that understands your business, that understands your lifestyle. There are deductions, even if you do not own a business yet, or you are you're a self-employed individual. Even if you're not one of those, I believe it's still imperative for you to have this book, because you may be able to make deductions on your Schedule A. If you own property on your Schedule E, you may very well be able to do that. So that is important for you to be cognizant of as well. Schedule C's for the self-employed. Schedule C's can be for the business owners. Schedule C for the entrepreneur. If you are a business owner and you own property, Schedule E. Schedule A has room for other deductions. So it is important that we all be engaged in the business of our taxes. So with that being said, let me make some announcements. First and foremost, Pamela Stone will be back with us next week. We want to say hi to her grandbaby, her new grandbaby, and we want to welcome him to the family. How he is short of a newborn, and we want to welcome him because there's no time like the present for inculcating that kind of information into our children. Want to ask you to mark your calendar for April 29th, 2017 for the E3 Power Up 2017. And I want to share with you that the theme is economic justice. Economic justice for women. This is a women-driven event. Now, I will tell you, fellas, we're not ignoring you. We're not saying you can't come, but what we are saying is it's ladies in the house. We are also thanking Robin Tennille for being one of our ambassadors. She is going to be one of our ambassadors for that event. We are actually looking for 9 more ambassadors. We actually have another ambassador that has joined us, and that is Sarah Smith. So we are looking for a total of 12 to 15 ambassadors. If you would like to be an ambassador for the 2017 E3 Power Up, all you need to do is inbox me and say, in fact, all you need to do is say, Ambassador, I got it. And give me a number that I can give you a call at so we can discuss you being an ambassador for the 2017 E3 Power Up. It is going to be in Massachusetts. It is going to be in the Boston area. So I want to make sure you're cognizant of that as well. Also, I shared, and I want to thank Robin for taking me up on the opportunity to discuss opportunities. I have 3 specific opportunities that are in an industry that is very definitely well liked that I want to talk to 3 people about. I have 3 openings, and I am looking for people to fulfill those openings. And they are 3 of the best positions possible. I held the 3 of them. So I am looking to fill those positions. It is very definitely a business opportunity that is worth your time. With that being said, ladies and gentlemen alike, I want to thank you for being with me on today's broadcast. Next week, we are going to have the tax professional on. For the next 2 weeks, tax professionals will be on the broadcast so that they can then pinion off of what you got from those 475. Again, just for clarity, it is 475 deductions for business owners and those that are self-employed, and it's by Bernard Kamoroff. And no, I am not getting paid to promote his book. I'm promoting his book because we all need it, whether you're a business owner or not. I'll tell you what, if in fact you are not a business owner right now, when you get through reading that book, you will want to be one because your taxes will benefit from that. Now, I do not know this for a fact, so I'm going to put a disclaimer right now and say you may still have a possibility of starting a business today, especially in the network marketing MLM industry. You may have an opportunity, and you're going to have to talk to your tax preparer about that, and I'm going to make sure that that question gets answered next week. Since you can go back 3 months and you are able to say was preparation for the startup of the business, you very well may be able to get in a business this month and still have 2 months from last year for the deductions. Wouldn't that be sweet? Okay, folks, on that note, it has been my pleasure to be with you. It is every Saturday morning. I thank you so much for being my tribe, for being the tribe of our co-hosts, and we will see you back here again next week. So I want you to go out today and be extraordinary. We'll see you next week. Bye now.